Nirmal Jain, Chairman of IIFL. Nirmal, good morning. Thank you for joining us. Nirmal, the key differentiator for Indian markets really has been the institutional activity. So far in the month of September and early part of October, despite global economic concerns, the flows have been strong. So what really explains that?
In fact, fund flow in last few days has been pretty strong, and there are, I think, two primary reasons for this. One is the quantitative easing has continued. I mean, the tapering has been postponed for the time being. And therefore, the flow of money and the carry trades, there is one reason for flow of fund. But more importantly, rupee has stabilized, and in fact, rupee has started appreciating. And from FI point of view, if rupee depreciates, obviously, they take lesser dollars when they sell their, stocks or whatever they bought. And therefore, now in a scenario when people are looking at rupee again remaining firm or appreciating, so that is very encouraging for FI investors to bring in more money. And not only that, even the macro scenario, of course, is bleak on several fronts, but there are certain good signs. Monsoon has been good, agriculture is good. Agriculture growth may be almost 4-5% this year. Exports are picking up as rupee has become a lot more competitive. So I think there are some positive signals also from the economy. And another thing which we should understand is that, relatively speaking, India is quite well placed because, of course, China's growth is slightly higher, but number of problems also are there in China in terms of very high domestic debt and NPA problems with the banking sector and so on. And also the economy is saturated in terms of investment. So India can be an attractive destination for new money and investment, and so whenever things look a little stable, we should see flow of money coming in.
So second quarter earnings, Nirmal, would be an important monitorable. What is it that you're expecting from the upcoming earnings season? Will we see a bottom on corporate earnings?
I think one shouldn't expect much from corporate earnings. Maybe sectors like IT should report good results because of a very strong demand from US and rupee having depreciated from the level, say, it was about a year back. So IT margins will look healthy, IT volumes also will look healthy. But other than that, many companies have been reeling under tremendous pressure of high interest cost, delayed projects, raw material prices being high, demand slowing down. So I think one should be cautious about corporate earnings, and I think it will take a couple of quarters more for corporate earnings to bottom out and come back to their normal levels. But for the timing, it will be more like a mixed bag. So there will be some sectors, maybe telecom, maybe IT, where I think scenario in telecom, in fact, the revenue per user has been moving up. So that sector is doing well. But other than that, the larger core sectors, I think, will still be under tremendous pressure.
So what is the average earning growth you expect for Sensex and Nifty 50 names?
No, I think it will be a single-digit growth. So I don't think we should expect much on an aggregate basis. And also banks will be staring at huge losses on the bond portfolio. The government securities portfolio, they can postpone the provision by treating them HTM, which RBI has allowed. But still, I mean, most of the treasuries have a lot of other bonds also, and I think mark-to-market losses can be big. And similarly, the problems on NPA front also, one has to wait and watch how these quarter results are.
So do you expect to see worsening asset quality metrics from the banking sector?
Yeah, I think so, because till the growth and investment cycle picks up, it's very difficult to visualize that banking sector will come out of this negative trend of worsening asset quality. Having said this, every bank is different, and many of these things are discounted by the investors, and they're also looking at positive scenarios as things may recover in a quarter or two.
Nirmal, auto dispatch numbers for the month of September have been mixed. CVs have suffered, but rural or semi-rural related companies like Maruti, Bajaj Auto and Hero MotoCorp have done well. What is your take? Do you think this time around the festival season demand could surprise everyone on the upside?
I think the recovery will be a bit muted, and I don't think there will be a very robust or a very strong turnaround in auto sector sometime soon. primarily because the petrol prices have risen significantly, diesel prices have gone up, interest rates are high, and also the import price and the rupee depreciation impacts cost of raw material one way or other. Many times raw materials, even if they're manufactured within India, the prices are benchmarked to global prices, and therefore, or the raw material, the commodity part of it. So I think they will be, but at the same time, monsoon has been good. Rural economy is doing well, and therefore motorcycle, tractors, these segments should recover sooner. But I think that there will be recovery. I think on a very low base, because this sector has been reeling under pressure for quite some time. But it will be a very it will be gradual, and it won't be something which is very robust or turning around in a big way.
Nirmal, consumption, which was the typical defensive trade, may also be dealing with worsening fundamentals. Unilever parent has said slowdown in emerging markets is accelerated. Will this be the next bastion to fall then, and the valuations in this place were set to be stretched as well?
I think it may not happen, but although what you are saying about the volume growth slowing down, and margins because of that maybe come under a bit of pressure, may be true, but still the money that is coming into India has very little alternative. So the way most investors will look at FMCG stocks is their valuations are high. Even if volume growth slows down, it can pick up very quickly, because India at the end of the day is a great market from demographics point of view, as well as election will also put in a lot of money into circulation. And then after that, as whenever recovery takes place, you don't get these stocks if once you lose ownership of them. So most of the equity funds, when they have holdings into these sectors and these stocks like FMCG and consumer, they don't have much of alternative, because IT, pharma, and so there's very limited set of stocks. But having said this, the stock specific movement will be different. So there'll be certain companies that are less impacted, some companies more impacted. And although volume growth is slowing down, but still remains positive, and medium to long term future for FMCG companies, even in terms of demand growth, is very, very bright.
Nirmal, structural bottlenecks, they continue to really drag the entire infra sector, so to speak. What is your take there? Do you think now one is better off giving infra stocks a skip, because the policy window now will be very limited ahead of elections?
So at least what we can visualize is, I agree with you that there's very limited that can happen till election, because election code, everything will kick in, unless they can surprise by something that we can't anticipate. But otherwise, these sectors scenario will remain a bit bleak. But the valuations are so low that people may look at value buying, and buying from a perspective that after elections things will recover very strongly. But if you really look at the scenario in terms of orders and margins and profitability outlook based on things or what situation is today, I mean, it's very unlikely to have any recovery till election.
IT, Nirmal, has been very active. Tech Mahindra, HCL Tech have done pretty well. Will mid-cap IT as well do okay in terms of earnings?
I think IT, large cap and mid-cap, both one can look at, and is something which is, this sector has still some steam left, because valuations will be 15 to 20 times, depending on stock to stock, and therefore I would say that IT sector can attract some more money, and valuations can have some more upside. Of course, one has to wait and see how September quarter results are for individual companies, but a large cap as well as mid cap, both the segments can do well.
What is your take on Reliance? Because the gas price hike for Reliance KG Basin has been suspended till the time reasons for the sharp fall in production are not known. Even though Reliance on paper is a very attractive stock to own, is one better off giving RIL a skip?
No, it's a core sector portfolio holding, but I don't think any major favorable or adverse event is happening. So I personally feel that it won't be one of the leaders either for the rise or the fall at this point in time. So stock will remain in narrow range.
Nirmal, rupee appreciation as well as crude fall benefits OMCs. What do you think is going to be the OMC trade from short term as well as investment perspective?
One should wait, because this sector has always deceived in terms of clarity and visibility of earnings and predictability, because government is a big player. So if you look at the under recoveries in diesel, they are very significant, 11, 12 rupees or more than that. Those kind of recoveries will take a while to recover. And the subsidy burden has really gone up so much that this small relief still probably will not be enough. So I would say that this is a sector which is so sensitive and so vulnerable to policy changes that I would rather wait till election to have a clarity on what the new government is thinking about this.